So let's go ahead and analyze the Microsoft stock. This is actually a stock that I bought a couple of years ago. So a good thing about Microsoft is that they've been able to increase their revenue year over year by about 11 to 12%, which is actually really great. And these numbers are in the billions. So this year, 2020, $143 billion in revenue. Now, when it comes to the revenue, I also like to add the net income. So let's go ahead and add the net income. I like to compare both of the revenue and then compare it to the net income. If the revenue of a company is growing, more than likely their net income will grow also. And there have been some dips in net income by looking at the chart. But as you can see, the overall trend is an upwards trend. That's why I like to look at the revenue. So the revenue is up for Microsoft, which means that their net profit margin or their profit margin should also stay consistently in the double digits, which also means that their net income is in the upward trend. So let's go ahead and look at their net profit margin, also called their net margin. And as you can tell, when I look at the net margin, I'm looking for consistency, and growth is even better. With this being a tech company, I'm not surprised that the net profit margin is a little bit all over the place, but as long as they are in the double digits, I am perfectly fine with it. Now, the next thing that I look at is the shares outstanding, and if the company is actually buying back its shares. Now, Microsoft, they have been issuing out new shares all the way up to, let's see, about 2000. But ever since the early 2005, they've been buying back their shares, which is great because if a company buys back its shares, that means that my ownership in the company grows if I own stocks in that particular company. And I do own stocks in Microsoft. Now, the next thing that I pay attention to is the amount of debt that a company has. And one of the things that I like to look at is the debt to equity ratio. I like to see the debt to equity ratio be below 1. And overall, Microsoft has been able to keep it below 1 in the last 10 plus years. They went over 1 in 2017, but besides that one particular year, they've been able to keep it below 1. So debt to equity pretty much tells you how much debt does a company have in relation to its shareholders' equity. So one thing that I also like to do is I like to look at the total liabilities that a company has and then divide that by the net income that the company generates. That tells me how fast the company can pay off its total debt based on the net income it generates. And for Microsoft, this number was 10. So 10 years. I like to see it below 6, but there are companies that use debt in order to grow, in order to fund their projects. So that's not a bad thing when it comes to Microsoft because they are able to, like we saw earlier, they are increasing their revenue year over year and they're also increasing their net income. Now, the next thing that I like to look at is the return on equity. I like to see this in the double digits. Above 10% would be perfect. And the return on equity pretty much tells you how much net income a company is able to generate compared to the shareholders' equity. This is also a good way to tell if a company has a competitive advantage. A company with a competitive advantage usually has a high return on equity. And in the case of Microsoft, their return on equity is pretty high. And then also quickly, one thing that I look at is the return on invested capital. Also looking to see if this is in the double digits. It has been on the decline somewhat, but it's still in the double digits. So this is also looking very good. And also looking at Microsoft stock chart. Microsoft is currently selling for over $210. And I did notice that there was, of course, a dip in March because of the pandemic situation that we're in. They've been able to recover nicely, and it looks like they've been pretty much trailing sideways for the last couple of months. Now, is Microsoft a buy? I'm gonna say yes, but not at a PE ratio of 33, almost 34. I like to see a PE ratio below 20, and that's what I'm waiting for. So I do have shares in Microsoft, shares that I bought a couple of years ago, and I haven't added any more shares of Microsoft to my portfolio. But if Microsoft is able to, but if the PE ratio of Microsoft can come down to 20 or less, I will definitely buy more shares in the Microsoft Corporation.